Hey, good morning, everyone. It's Tuesday, September 21st. I'm Marv Eisen. We start today, as we do every day, with a view of the MarketWatch economic calendar. You can use any other economic calendar. I use MarketWatch. And today, Tuesday, September 21st, 3 announcements pre-market, none of which are market moving. It's after 8:30, so we can disregard this. I want to call your attention that tomorrow, Wednesday, September 22nd at 2 p.m., there is going to be the FOMC statement. You should stay out of the market prior to and just after 2 p.m. Unless you're in for, you like roller coaster rides with your money. Moving along to CNBC, and you can use any of your preferred news sources. I use CNBC because I just like it. It's a habit, and I'm looking for bad news. Well, the bad news happened yesterday with the market jitters based on, so they say, Chinese debt of a huge real estate developer that might affect U.S. banks. At any rate, the panic seems to be over, at least for the time being. All markets are in the green. No particularly bad news that I can see, and I'm just perusing this. You should do this every day, but don't let the news sway your opinion of the market. The market is going to set your opinion by the direction that it's going and the speed with which it's going to get there. Moving right on now, and this is the Emini, and I have yesterday's trading session earmarked between 2 blue vertical lines. The market opened up here at 9:30 at about 43.57 and closed at 4 p.m. at, 43.46. So closed down slightly. Now that might amaze you if you were playing the market yesterday, or trading the market yesterday. I shouldn't say playing, although that's the way many people view the market. With all the negative news and all the hand-wringing that went on yesterday about the market being down 900 points, that's the Dow, look what happened with the S&P. S&P started the day up here at about 43.60 or thereabouts, and ended the day at 43.48, so about 12 points down. Not terrible, right? You wouldn't know it if you were just listening to the news yesterday. You'd think that the sky had fallen. But at any rate, I do want to point out something about market movement. Look what happened to the market, and I'm going to zoom to a bigger scale. Market started out here at 43.57, and for the next 15 minutes went up to 43.70. Nice rise of 13 points. So, I mean, if you were trading the market the first 15 minutes and you were on the long side, you were having fun. Then at 9:45, market went down to 43.46, consolidated for the next 2 hours, and then from 11:30 to 3:15 sank down from 43.48 to 42.97. Pretty hefty drop. But then at 3:15, look what happened. Someone decided that they didn't like to take these losses, and so a huge amount of buying power came into the market. Nobody knows where it came from. Was it computer trading? Was it individuals? Was it trading houses, banks? Doesn't matter. The point is, the market can show 2 faces in one trading session. One very negative over most of the day, and the other quickly rising back up to fill the losses. So if you make money in the morning, don't think that the trend is going to continue in the afternoon. That's just an observation that you should just tuck away somewhere. But this is yesterday. This is February 20th. Now, I put a horizontal line here at 43.46. And this is where the market closed yesterday, 43.46. And I drew that because where the market closes on a particular day has significance for trading the following day. And I'm going to expand this. Now, here we are. The market is just after 9:30. on Tuesday, September 21st. Obviously, I'm not trading. I'm making this video, but I'm doing this for your benefit. The market is observing, or probably will observe, this close of yesterday. So if you are trading, notice that there's a gap of 65 to 46, about 20-point gap, where the market will very likely fill it. This box that I've placed here on my chart, this is from 9:30 to 4 p.m. This box is a calculation of Taylor's book method numbers. Now, these numbers are generally accurate. Sometimes they're completely, you have to throw them out the window. But for today, look what happened and I drew this box yesterday evening after the market closed, because I needed to get the numbers of yesterday's closing and average it in. But I placed the horizontal line to indicate where the market closed, because I always want to know if the market is going to open with a gap, and it did. And I also want to know the calculated support and resistance levels. And right here, the market started off, of course, it closed where it closed, and then the market zoomed up overnight, and then just as we come into today's trading session, the market conveniently fits down into the calculated support and resistance levels that I've placed here for you. So again, today's support is at 43.46, resistance at 43.70 thereabouts, 43.46 to 43.70. So that's a 24-point range. Watch for the window, the gap to be closed if it does, and trade safe. Exercise patience. Yesterday was yesterday, and today I don't think that the panic that affected the market yesterday is going to affect the market today, but my opinion means the same as your opinion. It's my opinion. You will observe the market, you will exercise patience, and remember, rule number one, when in doubt, get out. Anyway, this is Marv Eisen, and thanks for watching this video. Look for my next video, and if you're looking for some training on how to trade the S&P E-minis or micro E-minis, check out my course at timelessdollar.com. Have a great day. See you the next time.